Yeah, it depends. If I'm going to hurt liquidity, I don't sell all at once. But if it's a liquid position, like some large cap, and you have $2 million of it, sure, why not? Just hit sell. Well, it's the worst that could happen. Time to go find a new stock, you know what I mean? Too many people are addicted to one stock. It really hurts them. You don't work at these companies. They don't owe you anything. There's no loyalty reward in the stock market. If you hold your stock for a year, you don't get extra shares. Did they give you extra shares for being loyal? Did I know? Did you guys are in a different market than me? Who gets extra shares? You're in the extra share program? Y'all getting extra shares? Nah, you don't get extra shares. These people who are online and they're like, oh yeah, well, you know, I've been in this stock for this many years. Man, who gives a fuck? You get a loyalty rewards program? Yeah, it's called you get an extra helping of delusion. This is like, Cintas is like the greatest business ever. It's one of my favorite companies. I've studied these guys for a long time. I wanted to get into their business. It's so freaking good. This is a really good business to teach you the basics of finance. Maybe let me promote this little video here. Why not? Why not? I'm going to try to post it on Facebook. Oh, wrong. Shit, you're not going to see the Facebook of my girlfriend. Or my ex. What's she up to? She looks pretty. Even though she's cringing. All right, let's see here. I don't know why I'm the neo-grunge administrator. I didn't make that. All right, cool. So Cintas is like a weird industrial company. You know, it's a really, really, really interesting company because, again, it's super easy to understand. They make uniforms. So it's really, really simple. Corporate business wants a uniform, they go to Cintas, right? It's because they're not going to make their own uniforms, right? Who would want to do that? Like, you know, these uniforms are, you know, we're FedEx, we move packages, we're a logistics company, but we don't want to pay Cintas for all these uniforms, so we're just gonna go ahead and an incredible company. Yes, it's an incredible company. It can be an incredible company too, if I want, though. So in any event, yeah, I've been going to the dentist for the last like 2 weeks, and I'm gonna be going for the next 2 weeks. So wish me luck. I have implants. Three implants coming. Okay, so anyway, so this is a 10Q for the period ended August 31st, 2024, which is not the standard calendar quarter. So this is for June, July, and August, which is a little weird because typically it's usually July, August, September. So it's a bit of a weird quarter. But regardless, they sold $2.5 billion of product that quarter, and it cost them $1.2 billion to make. So they had what's called gross profit of $1.2 billion, which is around half half of revenue. So it's 50% gross margin, or gross profit percentage, or gross margin percentage, however you want to phrase it. There's a lot of different ways to phrase it. A lot of people don't understand margin. Some people call it markup. That's not what professionals do. So they would say the markup is 2x. You would hear that sometimes. That is not the way professionals talk. So this is a 50% margin. So 2.5 in revenue, which is 10 annually, right? 10 billion. So it's a big company. And 50% gross margin. And then you have the cost to run the business, which is SG&A. And that's only 600, 700 million. So the profit left over is around 600, but it doesn't stop here. We do have interest. And once we add in the interest, we have something called pre-tax. And then once we add in taxes, we finally have net income. So that's the income statement. Every income statement in America looks the same, by the way. There's no special income statement that doesn't kind of start with revenue and end with profit. That's more or less what it looks like. So interest for them was negative. So they borrowed and spent more in interest than they earned on their bank accounts. Let me do it like this. And then they paid a little bit in taxes, not a lot. Bernie must be mad. And that's it. This is called Cintas. CTAS is the stock ticker. I'll put it on screen. There you go. Okay. Cool. So I like this company a lot, not only because it's an amazing company, but it also is a really good tool to instruct with because it's not very complicated. And like I said, if you're a major business that needs 10,000 uniforms, you're not going to make your own uniforms. No company in their right mind, even a small business, is going to make their own uniforms. So they have to go to Cintas. And there's other companies, of course, that can make uniforms. But at the end of the day, if you want them professionally done, and it's not a crazy margin, they're only charging double what it costs to make. So it's not like they're making a fortune. Cintas is like the reliable company that gets a lot of business. So let's look at the balance sheet. The balance sheet is one of the other 3 financial statements. There's 3 total, a holy trinity. We just did the income statement for 1 quarter. We actually didn't do last year, so let's plug those in real quick. And I've built some software that can help you do this automatically, but I'm just going to do it manually because it's smart to do that for a little bit until you actually understand what's going on. And even then, I think it's probably smart to keep doing it manually, but some people, their investment strategy is a little different and they want to kind of focus on lots of different stocks. If you focus on just a handful of stocks, you should probably do everything manually. But anyway, the company, at least ostensibly, grew last quarter 7% year over year, which is not very fast. And we don't know if they had an acquisition, which would make it even less. Cash is where I start in the balance sheet. And they have 100 million here, but I spy with my eye another 300 million right here in investments. And I just lump all that together. It doesn't really matter what kind of cash it is, as long as it's cash money. It's to me, it's cash. All right, then they have accounts receivable. Accounts receivable is money your customers owe you. So, in corporate America, it's pretty different from might be what you're used to. In corporate America, you could actually order 10,000 uniforms, receive them, and still not have paid $1. And that's where accounts receivable comes in. So their customers owe them $1.3 billion. And again, that's completely natural. Their inventories are 300-400 million. So that's product that they're going to sell, but that's also raw materials, maybe cotton, I don't know, stuff like that. Uniforms in service. So this is a little weird to me because this is a rental. So in this case, they're actually renting uniforms and other materials. So they're not even, so these they still own, therefore they have to be on their balance sheet. All of your assets have to be on your balance sheet. Enron got in trouble for something like that a while back. And here's maybe the most important asset of all, which is your hard assets. So this is property, plant, and equipment. So this is defined as, and sometimes it's called capital. It's maybe the most important line in the balance sheet in a lot of ways. This is basically the amount of equipment, property, plant, and equipment you have after depreciation. So this is any asset that you have that won't be consumed in 1 year. So this is something like even a computer that's going to be last 3 years goes into here. But more often, if it's a lot of money, it's some kind of property or plant, some kind of equipment. All right, goodwill is something I suggest people ignore, just because it's an accounting thing that doesn't really make much of a difference until you learn a little bit more about accounting. And even then, you'll be underwhelmed by what it means. It's kind of just a sort of a fictitious number. Just give me a minute. Okay, so now there's services contracts, which I'm not sure how they account for, but we'll just leave it there. Right of use assets is another thing I would recommend ignoring. And then finally, we have other. And so we have total assets of $9 billion. And we'll see that, well, how much is the company worth? Well, each share is $210, okay? And then how many shares are there? 403 million shares. So even though a share is $210, you haven't bought very much if you bought one share, because there's 403 million. So there's a lot of shares. And in fact, the whole company, if you bought each share for $210, ignoring the fact that the stock would probably go up as you start buying it, but ignoring that, the company would be worth $85 billion if you bought all the shares at $210. So, but keep in mind, the company's only got $9 billion of assets. So how's that possible? And last quarter, the company only made 450 million. So maybe over the course of a year, they might make 2 billion. So the company's worth 84 billion if they make 2 billion. That seems, we're gonna learn how to interpret that. You know, that's kind of the key thing here. Is that a good thing? Is that a bad thing? How do we make heads or tails of that? Okay, so those are the assets of the company, but they have liabilities too. Here are the liabilities. Accounts payable is sort of the reverse of accounts receivable. This is stuff that you've benefited from, but you haven't paid yet. Compensation and other accruals are basically expenses that you've expensed even though you haven't paid them yet. These are actually this kind of the same column, so I'm just going to add them together myself. I can do that. You can do whatever you want here. I'm also going to make just a kind of a column for taxes in general. And then I'm going to do the same thing for leases. Lease accounting is extremely complicated. I suggest you don't even think about it. Okay. Finally, we get to debt. That's probably the most important thing on the liability side. This is money that is owed to a lender. Make sure you don't confuse it with other forms of money owed. Most of the liabilities is money owed, but debt is money owed to a lender that you're usually paying interest for. All right, so cash minus debt. They have something called net cash. They have $2 billion of negative cash. So they've got $2 billion of net debt. That means the enterprise value is around 86 billion. Enterprise value is a really important concept. Longboard got bought out. Wow. Lundbeck, huh? Wow. This was the for a 5/8 Oh man, that's ridiculous. Longboard was up a ton. Lundbeck has a similar name, so they decided to buy them out. Longboard, Lundbeck, we can't have two of those around. Let's just buy them out. Yeah, Cintas is one of the great American companies. All right. EV market and market cap are very much getting at the same thing, but we look at enterprise value because we're trying to offset the kind of impact of cash. We're normalizing market cap for cash because we know that market cap, we know what cash is worth, so we can adjust the market cap accordingly. And I've made so many videos on enterprise value that if you don't understand it by now, I don't want to explain it over and over and over and over again because it gets kind of boring. All right, but yeah, if you don't understand what enterprise value is, please do. For the thing for Cintas is 85 billion and 87 billion are pretty similar. So enterprise value and market cap are so close that it's not going to matter. EV is the preferred measure, but market cap's easier to understand. And cash and debt are just valued at the dollar amount for each. So you can just basically say, well, I'm paying 87 billion for Cintas because even though it's 85 billion for all the shares, I'm not getting much cash and I have to pay off more debt. So it's really 87. So you're just adjusting. And it can be a little bit tricky to get used to that idea. Some people get it right away, other people don't. And so now we come to the last of the three financial statements. We got the Father, the Son, the Holy Spirit, the balance sheet, income statement, and cash flow statement. So the cash flow statement just recasts the income statement. So here's the income statement. And the income statement said that, at least according to us, but also according to them, because we make our own personal adjustments. But in this case, we didn't do any adjusting because Cintas is actually a really simple company. The company made around 500 million. So how are we trying to figure out another way to look at this? Because this includes a bunch of accounting stuff, and we really just want to know how much money did we make. And that's what the cash flow statement tells us. And we adjust for all kinds of things. And the spoiler alert for this company is, at least for this quarter, they're basically the same amount. But a lot of times you'll have cash flow a lot bigger than net income, and sometimes you'll have net income a lot bigger than cash flow. And you kind of have to understand why that's happening, I think, in my opinion, to really understand business. And these videos won't just help you become a better investor. I think they'll also just help you become a better business person, which is probably more important in a lot of ways. So the cash flow statement basically reconciles all these little adjustments. And after reconciling all these adjustments, we can see the cash flow number actually didn't change very much. It went from 450 million to 460 million. Not much, or 470. So this is after we adjust depreciation. This is after we adjust this amortization, stock-based compensation, deferred taxes, and all the other working capital adjustments. But there's another thing called capital expenditures. We sometimes just call it CapEx. And here, Cintas spent a bunch of money upgrading their plants and property. And there's something called free cash flow, which is basically cash flow from operations plus CapEx. And now we're at 374. So net income is actually quite a bit higher than free cash flow. And this is just one quarter, so it doesn't matter that much, but it's something to keep in mind of it. They also made some investments, some acquisitions, other things like that. We just have to keep all that in mind. Yeah, I don't read Twitch chat, sorry. If that's a problem, I would suggest you submit some kind of complaint, which I will take and throw in the garbage can. All right, let's get back to this. So financing, 166 minus 231. Okay. So we can see that the company's cash went down over the course of this quarter, which is fine. They're a huge company, so the cash going down 241 million is not a big deal to them. I call that change in cash. This was FX, financing, buyback, and other. Okay, so we sort of completed one full quarter here. And we just have to complete more and more quarters, which is, a little laborious. And again, you can use this tool that I created so that you can do that a little more quickly. Just checking in on some of my other stocks. Ooh, Sava is up a ton. That's a good shorting opportunity because Sava is kind of like a fraudulent company.